Hey, Walter here, full-time trader, author of the book Naked Forex, and we're going to talk about some naked trading now. One of the cool things about working with traders around the world is I get to hear what's working for the traders, what they've been doing. And if you've read Market Wizards, the book, you know the name Ed Sequoia, probably the most impactful interview in the Market Wizards book by Jack Schwager was for most people anyway, was Ed Sequoia's chapter. And one of the traders I spoke to, he was talking about how he was trading with Ed, and he used a very simple system. Now, I don't know if this is true or not, but I do know that it fits with a lot of what Ed says about his trading. So what it is let me see if I can get this. This is Forex Tester, by the way, and we are here on the Euro daily chart. Now, what it is if I, yeah, here we go. What I'm going to do is I'm going to wait for the market to go somewhere. You can see right now there's a bit of a downtrend here, but now we're in a choppy market. So let's see if I can get it going in one direction, and then I'll show you what this looks like. By the way, before I forget, if you want to get 3 ways to grow your account quickly, there's a class waiting for you at nakedtradingclass.com. It's free, and you can check that out right after you watch this video if you want. Okay, so this is good. This is really good. Hold on, let me get the line chart on here so you can see it. So what my friend was telling me about Ed was the way that he liked to get into trends is he would wait for, see if I can find another one for you actually. He would wait for what's called like a move like this, where the market's going down, it hits bottom, starts to come up, and then comes back down again, and makes a higher low. So kind of like in my Naked Forex book, I talk about the whammy and the moolah. It's a bit like that, really. So what would happen is the market's moving really hard one direction down here, hits bottom, comes back up, and then tries to do it again, but doesn't quite get as low. Okay, that is all apparently, according to this guy who traded with Ed. That's all he does. So I'll show you how I would trade these, and I want to show you a couple of different iterations because these will actually completely change your trading strategy if you do this, because there's a couple of different ways that you might trade this. So for example, and I'll do both of them right now. So I'll put a buy stop right here above this bullish candle, and I'm going to put my stop loss down here below the first low right there. Okay, so that's one position, and it may not trigger, but it probably will. It's probably going to retrace here and then kick in, but we'll see. Then I'll put another same thing. I'll put a buy stop right here, same price, and I'll put the same stop down there. But what I'm going to do is manage both these trades differently. Okay. All right. So what's the risk on this? It looks like the risk overall from stop to entry price is about 420 pips, which is quite a bit actually. Okay. See, it's gonna retrace because it's a massive candle, and it could retrace the entire candle. If it does that, I won't take the trade. And one of the reasons why I like buy stops is because I avoid. Well, there you go. I had just avoided a terrible trade. So I'm going to dump these, and I'll wait for another whammy bottom or moolah top if I can get one. So we'll delete that then. Boom and blammo. Okay. We got to get our ad over here. Okay. That's pretty good. There's 3 ways there. And I bet one of them is going to make sense to you. One of the 3, probably. Okay, here's another one here. Again, where the market's come down. It's hit this level here. It's come up and it's hit that. So what I'll do is I'll put my buy stop above this, really the high over here. And I'll put my stop loss down here below the first low. You can see it's about 390 pips. So I'll take one here. I'll do the same thing again. Put the same buy stop in here. But what I'm going to do is my stop loss is 392 pips away. What I'll do for my take profit is I'll go okay, like that. 1200 pips like that. Boom, there we go. Okay, so it's triggered. And we're off, maybe. Good. So this is exactly what we were looking for. We saw the first touch comes up, touches again, but not nearly as deep as the first one. And because we traded higher, I'm in. And I've got two trades here. So what I'll do is on one of these, I just have a 3R target where it must go 3 times my risk to cash me out. The other one, what I might do is actually use some sort of a trailing indicator. So one way to do this would be to use, I don't have to use an indicator, but one indicator I could use would be this parabolic stop and reverse. So I'll just move my stop to that dot. And I know it's kind of hard to see, so I'll zoom in for you. But it's basically where this dot is right there. And I could use a moving average slope. There's lots of different ways to do this, but one simple way to do it is to simply put my stop loss basically right here on this dot. Okay? So we're still going. We're still trending. Now my dot, I know it's hard to see on the chart here. I don't know why Forex Tester makes it so tricky to see these dots. So I'm going to get stopped out here, aren't I? Nope. Still in. Oh, here we go. Now I'm going to get stopped out. Now the dot's actually right there, so I'll move it up just below that candle. Surely it'll get stopped out. There we are. All right. So I don't know what the payoff on that was. Probably a little bit more than 1R. But I still have my other... Oh, no, I don't. I actually trailed the wrong one. That's all right. Okay. So from the open price, 1,200, put that... Right, okay. So I'm just going to modify this one real quick and put my take profit. There we go. There it is. Cool. So now either this one is going to hit that target or it's going to get stopped out. Now you'll see the advantage of the two different. Oh, it's going to hit it. It did. Great. There's the disadvantage. So here's what I want you to think about when you're doing this. Number one is, first of all, you've got an entry to test, basically a whammy bottom. The market's going down, it hits a floor, comes up, pulls back again, but doesn't go as low. Same thing, you can do a double top, same way, where the second top is lower than the first touch, right? The first top. But what's interesting about this is that the parabolic stop and reverse indicator here, as using it as a trailing stop. I know it's supposed to be a trend indicator, but by using it as a trailing stop, what's happening is it's accelerating toward price. So it will tolerate a retracement during this move, but not too much of a retracement. Okay? But the payoff is if the market goes in my favor and then starts retracing kind of hard like it did here, it'll get me out of the trade before I lose money. As long as the market goes in my favor, at least a little bit in the beginning like it did here, right? It went pretty far. What did those two trades make? The first one made whatever. The first one made 400 pips, 450 pips, and the second one made obviously 1,200 pips. Yeah, 448 pips and 1,200 pips. So the 3-to-1 trade is very different because what happens is it tolerates all of this movement in here and doesn't really care how it gets there as long as it gets there. So it took a long time. And of course, you're going to be paying swap or possibly gaining swap for a trade like that. It takes a really long time to get there. But it's really set and forget. And it's kind of like, well, what are you going to give me, market? Are you going to give me all of the profit that I want, or are you just going to stop me out? And a lot of times, of course, the more aggressive you get, the more likely you are to be stopped out. However, it doesn't take a lot of winners to actually pile on some really nice profits and eat up all those little losers. So the great thing about splitting up your targets, I talk about this in Naked Forex in the book, is that it allows you to do both. It allows you to trail really tightly. So if the market goes hard against you, you're like, okay, that's too much, I'm out. But if you also use just a target like that, you can let the market get there any way it wants to. As long as it gets there before it hits your stop, you're fine. So So I really want you to think about, instead of, beating yourself up and trying to figure out the best exit, or determining if should I use this exit this time or this other exit the next time or whatever, what you can do is simply split up your trades like I do. And in the class, I talk about, like in the class I talk about at this page where you get the on-demand class, you'll see that we do a lot of that too. And that's how we're building up a very small account rather quickly. So go to nakedtradingclass.com if you haven't. Check out the class and learn more about what we're doing with our trading. So I wish you happy trading. Thanks for watching this, and we'll see you in another video. Bye.